Hello, everyone. Welcome to the stock-specific class here for Thursday, June the 24th. Let's take a look at the market conditions at first here, and not much has changed since the Tuesday update as far as the direction alerts. We're still kind of in the middle. Moving a little bit more to the bullish side, though, and momentum. Still in kind of the trending area and breadth, and moving a little bit further into the extreme area there in sentiment. The buy-sell ratios we're starting to see the buys, the new buys outpace the sells, and that's closing that gap right there. That's reflective of the market looking like it's getting ready to break out again, and all that kind of stuff on the charts. Sentiment had pulled back, has moved up pretty sharply in the last couple trading sessions as the market has moved higher. And this is kind of like what I was talking about on Tuesday, that if we do start to break out again on the indexes, we could start to see these signals move towards those extremes that would indicate an overbought market condition. If that's the case, we'll see how things look at that point. That's kind of the area that we would expect to see a larger correction kind of start from. Now, there's a number of things that go into a larger correction, the number of signals that we'll start to see, and some of them you start to see early, and then more and more start to build as you get to kind of crescendo a little bit. But very often, with the bigger corrections that take place, there's enough warning signals ahead of time that can allow you to make defensive decisions and or prepare yourself to trade some of those downward moves if you choose to do so. But usually there's a lot of warning signals that happen ahead of that to help you. And if you can get good at recognizing them, then they can be very valuable in managing, making your trading decisions that you need to make. All right. Let's take a look at the charts themselves. You can see the SPY today is right on the verge of breaking out to new all-time high. And when you're right at this point right here, and you're trying to predict when it will do it, it can happen by the end of today if the market surges a little bit further at the end of the day. You could see, if it doesn't do it today, you could see where tomorrow it pauses and moves a little sideways right in this area here. It could do that for a couple of days, or even pulls back a little bit from the previous high. And then eventually it breaks out through. So trying to know exactly what the market's going to do in an area right here in the near term becomes very difficult. Usually you don't get a big sell-off when you're this close to breaking out. If it does pull back a little bit off that high, it's usually smaller pullbacks, shows some indecision candles or something as traders factor in that information that you're about to break out to a new high. What does that mean? Do I want to be buying this to a new high? The market isn't reflecting an extreme overbought condition, and so although I would anticipate there could be some concern about things going higher, or whether traders want to buy things higher, you're not in that extreme range where it's showing everybody's already in. That could indicate that maybe it possibly doesn't break out. Maybe you do start a bigger sell-off from there. So I would say, from where we're at right now, there's just a very high probability that it's going to break out. It's just a matter of, is it immediately, or does it take a few days to consolidate along there before it breaks out? But ultimately, it should continue to move higher there. In the NASDAQ, or excuse me, the Dow's lagged a little bit further, but over the last few days, it's gained quite a bit of ground off of its low. It had a bigger drop right here where the other indexes didn't have as deep of a drop. But overall, I mean, I think the Dow is consolidated better than the other indexes, is looking better as far as a bigger run higher. Because if you go all the way back you go all the way back to May, this looks like wave A of a broader correction right here, wave B and wave C, which could mean that this has the bigger run on the breakout, where a lot of these stocks, the other stocks, broke out right in here to new highs, the S&P, the NASDAQ 100. And so what could be the case is that they've already, that maybe they haven't even started their deeper correction yet or consolidated in a deeper way. So we'll see how that plays out. But this one looks like it's heading higher as well. Again, all this can change too with all chart patterns. You start to see if there's a reversal right here, because what I'm looking at right here is here it looks like a bottom that's rallying off of. If it were to come back down and break below that, you're confirming a lower high right here and a lower low. That would be a lot more bearish for the market and would indicate, hey, maybe we aren't rallying back up. Maybe this is the start of a bigger drop. So again, the key to all this is to not try to be, you're not trying to be a market psychic. You're not trying to predict. You're trying to forecast. I think forecast is always a better word. And that's why, they call them weather forecasts and not weather predictions. If they called them weather predictions, you'd be, and you might already do this, be cursing at the weatherman every night because, hey, you said it wasn't going to rain and it rained. Everyone knows that unless you're a weather forecaster in San Diego, you're not going to get the weather right all the time. Weather forecasters in San Diego, it's easy. It's going to be sunny and 70 degrees all year round. But they're forecasters. The majority of the time when they're predicting rain, you get rain. But there are times where those models shift and weather shifts a little bit, and they might come on a broadcast the day after they predicted rain for the day and say, hey, the models have shifted and it's less likely today that we're going to get rain based on what the new data is suggesting. And so you have to be flexible when analyzing charts, not to dig in so much to where you start assuming an absolute outcome. But you also don't want to be so waffly that you can't focus in on any sort of trend that's taking place. Because sometimes within a larger move, like something like this, a larger, stronger direction that you're seeing, you'll have these little back and forth moves right here, and you don't want to be having a move like this and then saying, oh, we're dropping, this could be the end of the world, we're going to collapse right here, and then it moves higher, and oh, everything's fine and we're going to collapse right here. These pullbacks are really minor. They wouldn't tell you that. They're telling you that although it's weak that day, it's not showing anything that's breaking that overall trend. And we're going to learn a little bit of this in some of the upcoming candlestick training I'm going to be doing on continuation candlestick formations. We've been doing a lot of reversal ones. I think we're going to be wrapping up the reversal candlesticks today. But I'm going to show you some continuation formations that can sometimes look indecisive or bearish, but can actually be an indication of, hey, everything's still fine. The trend is still acting like the trend. And I think that'll be helpful learning some of those as well in some of the upcoming training classes here. All right, NASDAQ 100 breaking out to new all-time high today. Now it did kind of gap up today, and it's come off its highs of the day. You do have to be a little bit concerned that it could be forming a shooting star candlestick formation, which is a bearish kind of short-term formation there. Now, sometimes that could mean that just maybe pulls back. There it gapped up. Maybe it pulls back to where it gapped up the next day and then takes off again. This is not suggesting that this is going to collapse from here. And again, we still have a little bit of time before the market closes. That could look different by the end of the market day, but it could also mean that something that we've seen a lot recently, which is a rotation within the indexes, where during the downward move, we saw the Dow really get beat up. Money was coming out of the Dow stocks but we saw the Nasdaq 100 continue to move higher. This movement here is completely different than what the Dow looks like, where the Dow is moving lower. I mean, let me just switch back to the other slide just to remind you. See, this is what the Dow was doing during that same period of time. So obviously, money was coming out of the Dow stocks, and it was flowing into the tech stocks, particularly the large cap tech stocks, and it was driving that forward. Well, this could mean that maybe with the strength we saw with the Dow there, with the initial strength that we saw with the Dow rallying over the last few days, maybe what we start to see is a reversal of that, where money starts coming. People take profits on the Nasdaq 100 stocks that made a good run, and that money starts to go into the Dow stocks. And maybe we see the Nasdaq 100 pull back a little bit further. Maybe it pulls back to this previous breakout area here, and you start to see that money move over into the Dow stocks and fuel the Dow stocks runs. Now, it could also go into small caps or something like that, but it could just be a rotation going on. And that's why the only time I would really say, hey, this market is really looking like the whole market is looking like it's going to pull back, is if you had a situation where all the major indexes, the Nasdaq, the S&P 500, the Dow, the Russell 2000, all were showing bearish shooting star candlestick formations. I'd be like, look out, we're gonna probably pull back here in the next couple of days, and because it would be showing that there'd be combined selling going on, and when you start to see combined selling, it's usually not planned selling, it's panic selling usually that takes place when all the indexes are moving together. And then the Russell, same thing. You had nice strength over the last several days. In fact, yesterday the indexes were flat to slightly down. Most of them were, and yet the Russell was higher. It has been higher all week, and it hasn't broken out to new all-time high yet. Its new all-time high or previous all-time high is back here. It came close to it a couple weeks ago. But it could be on its way on this particular move to getting there. We have had a few days up in a row. It could have a little bit of a flatter pause day somewhere in there, but I don't think it would be anything to panic over. It looks like it's going to move its way higher. And so all the indexes are looking pretty bullish right now, and that sets a good stage for individual trades. Let's peek in real quickly to the VIX. VIX is not showing any fear. It's continuing to decline. Now, it can be viewed as getting down to levels that is almost too complacent, or where there's not a whole lot of worry going on, and that's when you need to be a contrarian. But typically, what we're looking for is that complacency when the market is getting overbought and getting into that extreme overbought level. So what we'll keep a close eye on, going back to your direction alerts, is, do we see momentum get into that extreme area? Do we see Brett get into that extreme area? And then these are pretty far off. They can get there pretty quick, though. If the market really starts having several days where it's charging forward, it can get into these extreme levels pretty quick. And we're already in the extreme area on sentiment. Does it start to get to closer to the far right side of that? Do we see in this sentiment indicator right here that we're up in the red? We start to see all of this happen where the market is moving higher and the VIX is moving very low, and we're seeing extremes. Usually in those conditions, you're within days of the market having making or starting a pretty significant sell-off. So we've talked about this a number of times before. That's one of the reasons why during this last sell-off, I didn't feel like it was too much to worry about, because we weren't selling off from an extreme condition. So it looked more like a mild sell-off, and it still looks that way right now. All right, let's get into some individual stocks here. A couple of these I covered on Tuesday, but they're still looking pretty good. If we go under transportation stocks, under the hold, this 98 strength rank EDRY. Let's switch the signals on here. Again, I just like this little pullback right through here. It looks like it's pretty close to going back to a buy signal. Let's see how close. We're real close. It's possible if this thing goes a little bit higher today, it could switch over and signal a buy by the end of the day. If not, if it moves up tomorrow, it should trigger it. Now, just another trick here. You hear me talk about, cup with handle formations. You have the cup with the handle candlestick chart formation. And you always hear me say, I love these formations because when the stocks break out of that bowl or that cup, they break out above here, that they can often move. The rule of thumb is they will tend to move up about the same distance as the top of the bowl, the bottom of the bowl projected upward. It's kind of the same with an inverse head and shoulders pattern. You have the shoulder, the head, the right shoulder. Here's the neckline. When it breaks through that neckline, it can have a tendency to move up between the distance of the shoulders to the head, projected upward. Again, these are great rule of thumb target areas. They don't work all the time. They're not perfect, but they give you a lot of confidence that you're expecting a big move. Well, on any pullback, you can use kind of the same concept. It's all part of the same concept or belief, and that is that when you get these pullbacks right here, if you're starting to move back up, if you get back up to that breakout area right there and break out, you can take the distance of the top of the correction to the bottom of the correction right here and project that distance upward, and it gives you a kind of a minimum target or expectation for that stock to move. Now, again, it doesn't always move that far. It doesn't always move that far immediately. Sometimes it can drag out, and maybe it breaks out and then moves a little bit more sideways and gradually works its way up towards that area. But at least what it does is it helps you kind of formulate a minimum target, so that it helps you manage your trade better that way. If you have no idea where the stock could go or how far it could go, it's really hard to stay in your trade. Because you have these profits that are right there, they're right in front of your face, and you want to grab the quick profit that's in front of you. But the key is trying to get the maximum out of the move as you can, to get the biggest reward for the risk you're taking. And one way that helps you do that is recognizing some of these little chart patterns and techniques that work. Everybody that's a chart technician knows these and uses these, to be able to learn these so they can help you stay in your trades a little bit longer. So back here you can see the same thing. You had a little bit of a pullback right here. When it broke out, you could take the distance of that correction right there, project it upward. Gives you kind of a minimum area to expect that stock to get to. Obviously, this one exceeded it. That's often the case. As usually, if you're in a strong trend, it's going to exceed it. That's something I was kind of looking at when I'm going through, and this is at the top of the list, a 98 strength rank, about to go to a buy signal, and do I think it still has room to run? And I'm thinking, well, boy, if that is a correction right there, and it keeps going, you'll get the buy signal before the breakout. But if you do get the buy signal somewhere in here, this still has that potential to make a decent enough move to get a good return for your trade. And who knows, maybe even goes a lot further than that. I don't know what the growth stage of where this stock is in its growth stage, but anyway, that's just kind of a trick that you can use to help with kind of minimum target areas to look for. And by the way, I'm not saying you have to get out at that area there, but that's kind of an area to expect, an expectation area for it to get to. And like I said, it helps you kind of stay in the trade and avoid wanting to get bounced out of those little back and forth moves that happen from day to day sometimes. All right, under computer and technology, talked about BLMK on Tuesday, 99 strength rank. Like this one for a while. It had a buy signal. We had talked about it when it was in a buy signal and it was moving sideways. I like the consolidation through here. It went back to hold, but it looks like it's getting ready to go again. Had a nice up day yesterday. Again, you have a situation where you had lower high, a lower low, and then it ran up and gave you a higher high right here. And what we're really looking for is kind of a breakout move, which would solidify that as a higher low. And again, if that's the case, you could take the top of you have a little bit of an inverse head and shoulders formation. You could take the bottom of the head to the shoulder, the neckline, project that distance higher, or even use the previous all-time high up here as target areas. So that one looks pretty good. I also like this MVIS Microvision 98 strength rank. Now this has been one of those stocks that's been attached to the meme stocks or the Reddit traders. I might do a little trading one of these days because I know sometimes I have an older trading crowd that has no idea what a meme is. I still have I just graduated my youngest daughter from high school this year. I've got two sons that are college age, and so I'm still able to stay up to date a little bit with the younger crowd and the lingo, the language. But I thought, there might be some older people that don't know what a meme is, and when people say meme stocks, what does that mean? So I might do a training on what that is and what those stocks are and why they can be significant. They are a little bit more dangerous to consider. You definitely want to be making sure you're following traditional chart patterns and price action with them. But what I like about this right here is you had this big run up right here. You had a consolidation down through here, a big breakout move right here. This is where this stock kind of came on the radar with a lot of people when it made that big of a move in 3 or 4 days. Since then, it's come back down. And, I like these kind of bowl-shaped moves, kind of have this little bowl-shaped move right here. And then it's kind of pulled back a little bit from that bowl-shaped move. A little bit of what we call a cup with handle formation, although sometimes the handle is a little bit more sideways, a little bit more of a sideways consolidation. Where we're at right now, we've got a little bit about a 50% retracement of that move up the right side of the bowl. So this is an area where you would expect to find a little bit of support. Not to mention you had a little bit of resistance up in this area right here that's kind of in that same general area. So you definitely want to wait for some confirmation on this one to have it go back to a buy signal. But if it goes back to a buy signal, and let's see how close it is to coming back to a buy signal. I still have a little ways to go. Not too much, but a little bit of confirmation there. You could put this in your watch list and have it signal when it goes from hold to buy. But if it can rally off of this significant area right here, this key area right here, it would give you a significant higher low that you'd like to see. I already had a higher low back here as it kind of formed that bowl. And I'm not saying you have to wait for it to go to a higher high right here to get in, but I think if it went back to that buy signal, that would be enough momentum to feel like it's moving back up, possibly to retest or break out from these previous highs. So I think there's potential there. And if you had kind of the Reddit crowd behind it as well, doing some of the buying, now it could get volatile with some of those stocks that they're trading where you see big swings up and down. And if you want to avoid some of these altogether, I don't blame you. I don't put it in the same category though as like a GameStop or an AMC. Those stocks just been headlined for months, and they have really wild swings off of their price. This one's been a little bit more steady with some of the movements. You're not seeing $80 movements in a day or something like that, as you see with GameStop sometimes or something like that. But anyway, this is one that I kind of like the way it's forming and shaping up. Another stock under computer and technology is LEDS, 97 strength rank down here. And it looks like it's had this big run up right here. It's kind of pulled back. It's kind of having a little bit of a kind of a bull-shaped move or a little bit of a sideways move. Now, I will kind of throw out a warning sign here. It has retraced about 50% of that move up. So from a retracement standpoint, it could be considered, the pullback could be considered done. But we also know that that's kind of a rule of thumb, that stocks will tend to retrace about 50% of their moves, right? That's what kind of creates that stair step, that stocks will tend to pull back about 50% of their previous moves. And, we're in that area there, but we also know that from that retracement class that you can be a little bit more shallow than 50%. You can also be a little bit deeper than 50%. And one thing I am a little bit concerned with is the possibility that maybe this first move, since this wasn't too choppy on the way down, it's a little bit impulsive on the way down. So that could just be wave A, and this consolidation here could be wave B. And it might have another move down for wave C that makes it a little bit of a deeper retracement of that move. So that's one thing I would consider on something like this. Now, if the deeper it can retrace that move down, the deeper it can get up here on the right side, the less likely. Usually when you have a sideways, if that's a wave B, usually it's going to start moving down off of that sideways range. Meaning if it starts breaking out above this sideways range, it's probably less likely that that's a wave B and you're going to get wave C coming down, and more likely that that's the correction and you're moving back up. And the fact that it has a little bit more of this kind of bowl look to it, usually that's why I like to see those bowl-shaped moves. They tend to be a lot more bullish. It tends to be less likely that that's wave A, wave B, and then you get wave C coming down. But that is something that you'd have to kind of consider there. And you're not, you don't have to make that decision right now because you're waiting for it to go back to a buy signal anyway. See how far that thing can rally up although it's really close to going back to a buy signal. So probably any move back up towards the highs of today would probably push it to a buy signal there. But, and it doesn't mean that, just being aware, just with these types of possibilities right here, I can still be worried that it could have another drop for wave C and still get in the trade. I could get in the trade expecting that it's going to keep moving up from here. But being able to recognize, and this is why it's so important to be able to recognize chart patterns, recognizing that, hey, this is still possible, this has further to drop. Well, it doesn't mean I can't buy right here, but I do know that if I buy right here and then it starts to move lower into this area down here or breaks this area down here, I know I'm wrong. And it is probably in wave C. I need to get out. I don't need to be holding on, hoping it goes back up again. I need to make a decisive decision to get out, cut my loss, and move on to something else. And so, the value of being able to analyze these things is not always going to make you money. But it could cause you to lose less money. And anytime you have a situation where you can maximize the money you're making by being able to recognize what's going on and minimize the money you're losing because you can recognize when you're wrong, then you've got a good system. And I think too many people try to focus on the perfect system that's going to tell them they're always going to be right and they're never going to be wrong. That's human nature. We want that. Everyone wants that, but that's never going to happen. And so, and that goes with all these candlestick formations I'm showing you too. Like I said before, we've been focusing a lot on reversal candlestick formations. Well, not only can those help you get into a new trend early, up or down, because you recognize a potential reversal, but it can get you out of a trade. Take profits because, hey, I'm getting a bearish reversal candlestick formation here. This thing is likely to drop in the near term. Might as well get out and take the profit I have right now. So it can be very valuable from different in different situations. All right, let's go to industrial products. And I like the one at top of the list here, VTNR, 99 strength rank. This is probably real close to getting a buy signal. Had this nice sharp move up. Here's the consolidation. And you had the big sharp move up yesterday. Let's throw the volume bars back up there. So you had this, you didn't see the volume that you saw back here. There was huge volume back here that drove that up, but you did see a big volume spike off of that move. And you're already seeing higher volume today, even though you're getting a little bit of a consolidation right here. Happens a lot that you get a pause after a big day. That's why a lot of times when you get a really big up day out of a correction, sometimes I don't always get it, particularly with an option trade where timing is really important. Sometimes I'll wait another day or two because you'll consolidate a couple days before starting to move up again. And that saves me from time decay in an option trade where I'm not moving anywhere, or maybe I'm moving down a little bit for a couple days. You see it happen all the time with big, unusual moves. I like to usually wait till they consolidate a little bit after a few days later. Now, sometimes they'll take off again and you'll miss the trade or something, but majority of the time they're going to tend to move a little bit more sideways for a couple days before advancing again. All right, so I like that one. I also like in industrial products this APWC. I think I've gone over this one before. You kind of see this kind of a bowl-shaped move forming. Recently, you did go to a higher high. This is kind of an even high. You had a lower low right here. You had kind of an even low right here. You had a slightly higher low right there. It looks like you're getting a higher low right there. If this thing gets back to a buy signal, and particularly if it breaks out to a higher high right there, you've got a really good pattern there that could have some big upside potential. Could work its way back up to that previous high again. And again, not immediately necessarily, but can kind of work its way back up there. All right, and another one, industrial products, I've mentioned before. This one's it's already a buy, but I brought it up a number of times. Plug Power, PLUG, 96 strength rank. Let me take the volume bars off so we can see this a little bit better. And I was recommending this back in here where it was kind of breaking out. The same thing. You had a lower low right there, but you were getting a higher high. It pulled back a little bit. Now it's starting to go back up again and giving you a higher low. Had a nice solid up day on Monday. So this is what I'm talking about. You had the big up day on Monday, and then the next couple of days have been just kind of consolidating that, moving a little bit sideways. But it's looking like it's getting ready to break to another higher high. And again, if this is reversing, there's a lot of upside potential there if it works its way back up. Now, just like you're looking at the higher high, higher low on the way up, if we do move higher from here, this is going to be a significant higher low. If somehow we break out right here and then something reverse and then drop back below this area, now you're going to a lower low. Doesn't necessarily mean that you can't still go higher, but that's a warning sign that your trend could be changing. A lot of times I like to use those areas as stop loss areas because, hey, if this thing that was looks like it was starting to have higher highs, higher lows, now has a lower low, I don't know what it's doing, and maybe I don't want to be in the trade because I don't know what it's doing. That might cause me to want to stop out of the trade or something like that. So you can use these key areas right here as ways to manage your trades if you want to do that. All right, let's get into our candlestick training for today. And let me switch this over to candles here. Now today's candlestick training, like I said, I think I'm done with the reversal candles. If I can think of another one, I've been trying to, as I remember the last one I did, I had the price action in my head, but I couldn't remember the name of it. I had to look it up. It was the homing pigeon one. This was back on Tuesday. This one, it's called a matching low, and it's very similar to the homing pigeon. In fact, many cases you're going to have it's either going to be it's going to be very, you're going to have a situation where you're not quite sure if it's the homing pigeon or a matching low, and it really doesn't matter. That's both telling you kind of a bullish reversal type formation. What this formation is pretty much what the name implies, that you're moving down, 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 and you have a stock that reaches has a down day, preferably closes at the lows of the day, although you could have a little bit of a tail on it. You don't want to have a big tail on the low or on the close, but you could have a little one just because if you're looking for the exact close at the low, you're hardly ever going to find any of these. The next day it gaps up, and it could gap all the way up here. The size of the candle that next day isn't as important as the fact that it opens stronger. It opens up a little bit. A lot of times it'll be a little bit of a smaller candle where it'll open higher, and then it'll go down, and it'll close right at or very near the low of the previous day, and that's why they call it a matching low. It usually is a signal that the sellers are exhausted, and usually you'll see a bounce off of this. Again, it could just be a short-term bounce, but you do see a lot of times you see a whole trend reversal sometimes off of this formation. Now, you're saying, well, Jerry, isn't this what we talked about on Tuesday? It's very close. The homing pigeon is similar, where you have the down day. And remember with the homing pigeon, it was the inside day, or the harami, where it opened higher the next day and closed lower than where it opened, but it was kind of inside of that down day. Now you can see here where it could be either one. Sometimes this day will be down, and you'll see this in a couple examples where it didn't quite get to the low of the day, but it's very close to the low of the previous day. But it's a little bit higher, so you can say, well, that's a homing pigeon. It's inside that candle. This is what I don't want you to do, is get so hung up on what the name is. The bottom line is the price action on both of those is suggesting that sellers are exhausted, and that you should get a trend reversal on those. Okay. Let's take a look at an example. And by the way, the exact close, the exact matching low is very rare. I had to go through a lot of charts to find examples, and there's really only a couple that were really good examples. Some of them were kind of the iffy ones, but that's okay, because that's why it's still important to learn that price action, because if you ever see it, because it's rare, you know that it's really significant. There's a pretty good chance it's going to work out, because it doesn't happen very often, and usually if I find one or see one, I'm really confident trading it, and I might even be aggressive in trading it. Although they tell you to look for confirmation on some of these. If I find a rare candlestick formation you don't see very often, I have a tendency to be aggressive in trading it, just because there's usually a pretty high probability that it's going to work out. But an example here, if we look at Twilio, TWLO, And this one happened just recently. You had the big down move right here. Now, you didn't have a long decline. You had a couple days where it was declining. A big down move right here. The next day, it opened higher. It opened up here, tried to rally up a little bit. You can have tails on the upside. In fact, very often on this one, you're going to have a tail to the upside as it opens higher and the buyers try to push it up. Sellers push it down to the close of the day before, but they're not able to push it lower. Now, what I really liked about this example here, though, is you had it open right at that low. Sellers tried to push it down lower, and then it reversed, and buyers closed it near the high of the day. That's a very strong combination right there. And again, not only are you looking at what the formation is, but you're trying to understand the psychology of what's going on. Sellers sold this thing all the way down. Usually it closed near the lows of the day. It looks like a pretty strong down day. Sellers were in control. Next day, buyers opened it higher, maybe even traded a little bit higher. Sellers were able to push it back down, but couldn't close it lower. The next day, it opened. Sellers tried to push it lower early, couldn't. Buyers pushed it back up, closed it near the highs of the day. That's a great illustration of a shift in momentum. A nice little reversal off of that. Let's look at MENELI. Also in June. This is pretty recent. Here's a little bit of a decline right here. Now here you had a close near the lows of the day. You had a little bit of a tail, and this is one of those where, as long as the tail isn't like this, where it's real noticeable, little tails like this, can be okay. The key, though, is going to be the close. Where did it close? Here, the next day, it opened higher, tried to rally a little bit, came back down, closed at the lows of the day. Now, the low of that second day was slightly higher than the low of the previous day. So you could call this a homing pigeon, because it was a little bit of an inside day of that. But like I said, what does it matter what the name is? The price action right there is bearish. It opened again, very similar to the other one, at the lows where they closed the previous 2 days, and then bam, had a nice bullish reversal that catapulted this thing higher. Apple, back in February, and again, this is another one that could be considered a homing pigeon. It didn't quite get to the low right there. We had the down day. It opened up here, closed near the low or near the close of that previous day. This big pop right here. Now, it didn't last very long. And there was another one back here that we had mentioned on Tuesday, where a bit of a homing pigeon, matching bottom, whatever you want to call it, popped a little bit right here and then it declined. But it's a very short-term signal that it should move higher, that the buyers are gathering strength. Let's look at 3M. Right in here. This one you had a large decline right here. Again, the size of the candles isn't important. I usually prefer to have the first day be a longer down day and close very near the lows of the day. Here you had 2 days where they both almost look the same. They're not the same candle, but they look very similar. It's still kind of that matching low concept, where here was the close. It opened higher, tried to rally, came back down, closed at the lows of the day, very close to where it closed at the day before. Anytime you see that, that's bullish price action. It's telling you the sellers are exhausted or exhausting. And usually you'll get some sort of a little rally off of that. Look at STX. Now this is one that we can kind of watch in real time here. Here was a low right there. It opened higher the next day, closed at the low of that previous day. Did dip a little bit the next day, which usually you don't see that, but it has started to move up a little bit. We'll see. Sometimes with these candlestick formations, you don't always get an immediate move. I mean, even if we go back to 3M, the one we were just looking at, the next day it had an intraday low that came all the way down here, ended up closing back up in this area here, but it did try to test. The sellers did try to test a little bit lower there before moving higher. Now in my notes on STX, I put a little question mark because you usually don't want to see it move lower or close lower than the matching low formation. It did close lower on Tuesday, but it has kind of had an indecision day there, and it's kind of come back up again. We'll keep an eye on this to see if it's just, it may be that, because remember that what the matching bottom is showing you is a potential shift from the exhaustion of the sellers to shifting over to the buyers. We're seeing an exhaustion of the sellers with what we're seeing right here, but we're not seeing the buyers yet. We're not seeing the buyers jumping in any strong way yet. It did happen at a pretty significant support area right here, and that might be why it dropped a little bit lower on Tuesday, because maybe it found a little bit of support at that previous support area right here. But the reason why I like this one to point it out is what I'm trying to do in some of these situations I've mentioned before is I try not to imply that every time you see this, it's going to work. This is one we can kind of watch, and it might, I don't know how closely I'm going to watch it just because I have so many things I'm watching. But if you want to keep an eye on this for the next few days and see how this turns out, see if it bounces off of this, and if the buyers do come back in on this stock. If it fails and breaks the support level, then it told you that the sellers maybe weren't fully exhausted, or sometimes something can happen where there's another reason to sell. You could have an exhaustive, and this is why no candlestick pattern is perfect, is you could have a perfect looking formation that tells you that the sellers are exhausted, and then suddenly there's breaking news that comes out in the company that nobody knew about. It's breaking news that is a reason to buy, and suddenly those sellers aren't exhausted anymore. Or actually, what I mean is that there could be negative news that would come out, and another reason or a bigger reason to sell, and those sellers aren't exhausted anymore. It goes lower. It can drop lower. That's what I meant. Sorry, wrong analogy there. But the point is that you can always get unexpected things coming out. But the price action right here is saying that the condition of the stock is in a state where sellers are exhausted. They've sold all the way down. You had this big run up. You're at a support level right here. Sellers are looking exhausted. If there's any reason to buy the stock should start to move up, because it's like recognizing when you're in battle and recognizing that your opponent can't use his right arm, and that's his strong arm. His sword is broken in half, and his eye has been punched so much it's puffy and about to close, and he can barely see you. Well, you know that the conditions are in your favor. You're recognizing the conditions. The conditions aren't good. That guy's in good shape to fight you. That doesn't necessarily mean you're going to win, but you're recognizing the state. And that's kind of what, if you're using the fighter mentality here, that this stock has been beaten up enough right here, and if the buyers have any reason to buy, this thing should start to move up from here. All right, let's look at one more. Here we had a drop right here, big down day. Again, a little bit of a tail, but not too bad. The next day, I really like this one because it opened higher, and then the buyers really tried to push it up, and it came back down, closed right at the lows of the previous day. It even opened lower the next day as sellers tried to push it lower one last time, and then the buyers really pushed this thing up. Now, it didn't last very long. It had another move higher there and then pulled back. But that was still a bullish candle formation there, telling you that the sellers were exhausted at that point. Now, do be careful. And this is a cache thing on your computer. You know how you have to clear your cache on your browser from time to time. On the software, sometimes if you don't clear your cache, you'll get these duplicate days like this. I probably need to go and clear the cache on my chart here, but I pointed these out a few times. If you're seeing the exact same candle back to back, it means it's a duplicate day. It's not a different day. It didn't trade exactly the same for 2 days. Be careful that if you're looking for matching lows like this, that it's not a duplicate day. It shouldn't look exactly the same, exactly the same as the previous day. If it does, you know, you can check the dates on those, but it probably means that it just needs to be, you know, clear the cache on your browser, refresh your browser, and that should get rid of it. But just don't make the mistake that it's a matching low candlestick formation. All right, so that's kind of it on the reversal formations. Like I said, there might be a couple other ones, if I can remember. If there are, they're probably just like this one is a variation of another one. You know, I put matching lows and homing pigeons in the same category. Just a slight difference in the way they form, but the same results as expected. But I think over the next couple weeks, I'm going to focus on some continuation candlestick formations and learn a little bit about those. All right, that's all I have. Have a great weekend, and we'll see you Tuesday for the next market update. Bye now.